What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is March 30th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I not only want to spend some time to talk about how Bitcoin has been starting to show significant reversal to the upside over the last 3 weeks after having one of its worst sell-offs in history, but along with that as well, I want to spend some time to talk about the global macro environment for global economies and talk about how we're starting to see a massive decline in the economic data that had already started months ahead of COVID-19, and how I believe COVID-19 is going to be the drag that officially weighs us in not only into a recession, but most likely into a Great Depression for the 21st century. It's not something I like to talk about, but it's definitely something we have to talk about if it is happening. We've got lots of things to discuss throughout the video, but I want to let you all know that this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to engage and interact with other traders across the world and to also trade and invest in cryptocurrencies. So if you're interested in this, feel free to check out the link down below in the description. You can also access their copy trader feature where you can copy many traders, including myself, real time at the exact same prices and a variety of cryptocurrency assets. So check out the link down below in the description for more info. Now, I want to go ahead and jump right into this, guys. The broader market right now, generally in the green here, pushing slightly out of neutral territory with not many players in the red. Not too much serious price action here in the last 24 hours, but mostly recovering on a little bit of losses we had in the last 24 hours. And the thing is, a lot of people want to focus on the daily here, right? We can definitely take a look at the daily chart in a moment, guys. But the major thing I like to look at is the weekly, right? If I'm really putting in a sizable position into the market, or if I'm looking to take out positions of the market, which I haven't been doing during this whole period of time, during the sell side, I didn't do any cashing out on crypto, right? I've been sitting here in my positions, and the major thing that I look for here is what's the trend showcasing me for the next coming weeks, or the next coming months, and possibly, more likely, what's coming up for the next year or two, right? What are my target ranges for where I think Bitcoin could go? And quite frankly, not much of that has changed in the sense of the 1 or 2 year time frame, but on the weekly and monthly time frame, I have to say that I've actually been quite optimistic in the rebound that crypto has had from its lows down here around 3,800. In fact, we've been able to get back up to 6,300 at the moment. We had a high here of around 7,200 back on the week that we had after for the second most dramatic sell-off on a daily basis for Bitcoin. So in this case, I like seeing that overall, though, we have 3 green weeks of price action. We're holding up in this range. Now, again, sure, is it not 10K? Yeah, fair point, right? We're definitely not where we were back here in February of 2020, right? Most assets aren't, if you think about it. To think that Bitcoin is sitting at $6,300 where it is right now, with how small of an asset that it is, and knowing the kind of declines we've seen in assets like silver as well as traditional equities, I would say that this is a pretty decent sense of performance. After taking on 1% of the Bitcoin supply being sold off from the Plus token Ponzi scheme, Ethereum seeing a few $100 million worth of ETH being sold on the open spot market, this is pretty good, right? And not to mention as well, right, volume is actually kicking it pretty good. On buy days, if you notice on the daily side, except for today because we're still, we're on the shorter part of the day here, practically every single time, except for here on the 26th of March, every day is seeing an outpace of buy side volume versus sell side for the most part. So that's what's really exciting to see here. Overall, though, we still need more spot liquidity. That's the biggest hurdle for Bitcoin. But going again here to the weekly, right, I want to go ahead and talk a little bit about some time frames, getting an idea of what we could expect here in the sense of market performance, right? So let's go ahead here. We'll turn on our drawings. And there's 2 different scenarios here that I think a lot of people are going to propagate. One where we continue the uptrend now and eventually break out a little bit after the halving in July of 2020, and an absolutely bearish scenario where prices maybe go up here to 9,500 at their most, hit the line of resistance from the 3 significant highs here, and then collapse down below the wedge, breaking Bitcoin for a very long period of time and going to that 3K level that a lot of people have been calling for. And quite frankly, I don't think any of these are the scenario, guys. I don't think we're going to just rally right after the halving event. If anything's been proven so far, we've not only seen in the previous cycle, the halving event takes a while to reflect in price due to the supply and demand dynamics that are changing. It takes multiple months for that to happen, and it's going to probably take just as long this time around. But along with that as well, I don't think Bitcoin is going to collapse below the wedge, and I don't think we're going to come all the way back down here to 4,000 or 3,000. No, I think it's something much more neutral. And quite frankly, I'm not going to give you guys any specific timetable. I don't know exactly when it's going to happen, but I do believe that this wedge is coming into play here, and then in many cases we'll probably bounce in between here, right? Worst case scenario, 4,500, but I really do believe we're going to continue to press above this and continue to press along this line of resistance, eventually having a breakout. This is what we saw on gold markets, and inevitably what happened was after pressing up along it long enough, the line of resistance, what we tend to do, I'll go ahead and just kind of draw it here, right? I usually don't like using the line tool for this, but basically what you would have is you'd have price continue to push along the line of resistance. It gets above, makes that resistance support, and then continues onward from there, right? So not rocket science, right? Just a general kind of drawing here. And again, notice how I drew into 2021. I want to make it very clear, guys. I know it doesn't sound very exciting. We could very well not see Bitcoin get back above, 10, 14K until then. I know it sounds crazy. Quite frankly, I don't think that's going to be the case. I think we're going to get some action here in the next coming months, especially with the macro environment developing the way that it is. But I'm keeping open to that reality. And quite frankly, it's still a great return. You know any other asset class out there? I don't mean to sound snarky about this, but I'm just being real with you guys. Do you guys know any other asset class that's going to, go up 30, 50, 100% by the next year? I can't tell you equities are going to do that. Maybe, a few commodities, maybe gold, silver, possibly. They start playing on their role as a hedge. Anything else? I can't think of much, right? And as a macro trader, that's what I look for. I mean, I might have some individual stock picks that I might think, I think might do well. I might, for example, look at oil markets right now that are absolutely saturated. It probably don't have much more room to go down, right? And there's a few maybe other opportunities. But there's none like Bitcoin, in my opinion. The market size of Bitcoin is so significant in understanding its macro potential. Currently sitting right now, we'll go ahead and check it here, sitting at $115 billion. That to me is a steal. It's crazy, and it's just crazy to think here in 2020 we're still at $115 billion. But hey, not bad news. More time to stack, right? That's at least what I'm doing personally. But anyways, I want to go ahead here, right, and take a little bit of a look here at the ScalpX index. Again, markets as well as they have performed back up close to where they were back here, right? Fear is still in the market, guys, right? So again, this is still a time where people have generally lost faith in Bitcoin, but along with that as well, the index and its underlying either indexes or factors that play a role into the index are still signaling that markets haven't entered into any kind of greedy phase here, measuring volatility, measuring all kinds of different sentiment indicators in the market. So I think we're good right now. Once we get back above this sell side day, I think that's going to be a huge psychological barrier in the short term. And this is why on the Bitcoin chart, I do believe we could get anywhere up here between 8,500 to 9,000. A very short period of time here in the next couple of weeks going into May, into the halving event. I think there's going to be a little bit of a rally going into it. It's crazy to think, guys, we're about to step into April here tomorrow, or not tomorrow, in 2 days. And that basically means we're about a month and a half away from the halving event. Pretty interesting stuff. We're getting there. All right, so I want to go ahead here. I'll go ahead and refresh the page, just see where we're at right now. Checking in on U.S. futures right now. Relatively neutral across the board between the S&P 500, the NASDAQ, and the Dow Jones. Want to take a look here on investing.com. Go ahead and give a quick refresh. So you can see here a lot of these are not trading right now, but let's go ahead and adjust it to the time to see which ones are trading. We can see here for the vast majority of global equities right now in the red, but not too significant. I mean, we're definitely seeing less volatility here. And I think it's going to be a matter of really waiting until markets open up before we can tell where the market's moving right now. I would say, though, that this is an opportunity to discover over the next 2 or 3 days if what we had was a dead cat bounce across global equities. And the reason I would say that that's likely the case is COVID-19, though it is still persistent and a big issue alone itself, there are other global issues going on right now, guys. And this is why again, I emphasize that this is not going to be a V-shaped recovery. This is not going to just be a little short-term bump in the road recession. This is most likely going to be a depression. There's a lot of other things at play. You've got an oil war going on, where oil just today and futures right now are signaling that we not only went to their lowest levels in decades, right? We hadn't been down here since back in, I think back in 2008, if I'm correct. I'll go ahead and I'll check the chart here. So we went lower. Yeah, sorry, no, way lower than 2008. It's back in, in 2001. My apologies. Yes. So going down to our lowest level since 2001 in oil markets. And bear in mind as well, this has been since 2001. Think about how much inflation has been factored in this case. So we're talking about some of the cheapest oil prices we've probably seen since the 90s if we're talking inflation adjusted. But along with that as well, we actually entered into the teens here at $19. If you can believe it. I mean, this is absolutely insane, guys. There is a lot of fear going on in oil markets because you've got a price war going on between Saudi Arabia and Russia. OPEC's not cutting. U.S. hasn't cut operations yet. And sadly, what it tends to be is that in this case, cuts come to the form of bankruptcy. Absolute shutdowns of operations. Sorry, I don't know why I stumbled a little bit on trying to pronounce all that, but you get my point, guys. Like, we're basically going to see a very negative period of time, and it's upsetting, right? Because these are people's jobs, and it sucks because this is going to mean less energy independence for the United States. It's going to mean a huge hit to the economy, but this is just one of many examples of what's going on outside of the growing case numbers of COVID-19. Now, the U.S. has recently hit the top number of total infected cases in this case, and I know that would probably be a stain here on the U.S. in this case, but I'd say, quite frankly, this is probably because out of any country in the world, we're doing more tests now. We've really ramped up compared to South Korea and a few other players, but at the same time, we don't do a lot of things that would definitely combat these numbers. We aren't making homemade masks, which has been a really interesting movement in Czech, for example, where they've had a huge actual reduction in their total cases and actually have suppressed the growth of COVID-19. The Mask for All movement that's been really pushed forward. But I mean, there's a lot of things we could be doing better in the United States. People social distancing when they should be, when in reality a lot of them aren't. Non-essential workers staying home for prolonged periods of time, and along with that as well, again, making homemade masks and making that a social norm, right? Instead of having to take on demand of N95 masks for doctors and hospitals. And I think that's why the CDC has made a huge stance against masks in the United States. They're worried that people are going to hoard masks like they did toilet paper back a couple of weeks ago. And that's not as funny as toilet paper because that's something that's going to actually save lives at the end of the day, right? But again, we can talk a lot about COVID-19. We will dive into it in a moment. I want to go ahead and talk about the broader macro environment here. Take a look at Chinese exports to EU and US here. All right. This is really important stuff, guys. So tariffs were imposed back here in 2018. We already saw a massive hit for Chinese exports to the US here. Pretty big decline here through 2018 and 2019. Already recession level type drops in exports, right? This was already significant, minus 4%, just like back in 2008. And we don't even have the data here for 2020. This is significant. Really, really significant stuff, guys. We can see here as well, to the EU, numbers were growing, right? 2019, right? But not too significant. What's going to happen here when we actually get the up-to-date economic data in March of 2020? I think you're going negative, and you could easily start to enter into territory you had back here to the EU, somewhere around 8 to 10% down. A lot of catching up to the negative side here for China. But we already know right now the numbers are already looking pretty grim as is without COVID-19. What's it going to look like with COVID-19 when we finally get those? Along with that as well, U.S. trade as well getting hits, not just China. Imports and exports here. Imports remaining flat here, continuously getting imports from major countries like China, whereas our exports have fallen flat, going from all the way in November of 2019 from 14 million metric tons down to less than 1 million metric tons. This is so significant, guys. And the sad reality is most people don't either know that this is happening or where to find this data. And I mean, this is a huge reflection here. I mean, these millions of metric tons of exports that would usually be going out that are sitting either stagnant, not being manufactured, the whole invisible hand, the supply chain, comes to a halt as it has now. And that damages corporate earnings beyond belief. And when we're talking about equities, corporate earnings matter. Corporate earnings are what have driven markets. If you don't believe me, take a look at this correlation and chart here, guys. Driving up in the market, first quarter in this case, or first month of decline in corporate earnings, we go into a pullback. Dot-com bubble bursts. Back here in 2007, corporate earnings have a significant decline for the first time. Market goes into a recession, the worst we'd seen since the Great Depression. And now up here, we've been flatlining for the last year. Yeah, actually last year and a half to be more precise. So, what's going to give here? What's going to happen when we start to get these COVID-19 earnings reports here in April? It's not going to be pretty. Mixing that in with an oil price war, mixing that in with an already pretty stark trade environment between global imports and exports due to the tariffs and the trade war. Okay. The only other time where we had a decline here that didn't lead to a full-scale recession was back here in 2015 when we had a pullback in equities. It was still a 30% pullback nonetheless. So, again, heed credence to these very valuable indicators because earnings per share plays such a big role because of one simple reason. It drives stock buybacks, it drives dividends, and those are things that provide buy-side pressure through dividend reinvestment programs and just generally providing buy-side pressure through companies using cash on their balance sheet to buy up stock. Those are really the two things that are going to drive markets. It is responsible for $15 trillion of inflows over the last 10 years. The biggest buyer in equity markets were companies themselves. So, interesting thing. All right. So it looks right now that the current administration is possibly going to push back their April ambition. And this makes me upset. Personally, it just means that this is going to go on for a long period of time. But I believe it's probably a smart choice at the end of the day. If it means saving lives and stopping the spread here, no doubt about it. I think we all need to play our role. We need to come together during this time and make sure we do what's necessary according to the health officials in this case. And there's a few key developments here that I want to discuss here. Luckily, Bloomberg's got them pretty much all bulleted out here, right? First thing here is cases top over 725,000, sadly with over 35,000 dead here. Current existing numbers are actually 732,000 at the moment. And again, due to new testing, we're really starting to get a real reading on where we are right now. Not to mention more cases are developing, no doubt. But coming back here, there's a few other things to keep in mind here. The FDA commissioner says distancing must go on until the spread slows, pushing back the date most likely towards April. Australia and China entering into stimulus territory. Australia doing 1,500 AUD to practically every citizen, from my understanding, and China also joining it into a massive wave of stimulus. The U.S. is also allowing emergency use of the drug that Trump had recently mentioned, the two malaria drugs that had been referred to beforehand. So I'm actually really excited to see this. I honestly think that the arguments made against people using this drug who are struggling from COVID-19 is saying, oh, there might still be more risks for the end user than there are benefits. I think that's a BS claim. I think that at the end of the day, it's also definitely wishful thinking right now that this is a foolproof tool for people. But at the same time, with the kind of studies that have been developed and the individual personal case scenarios, I think that people should have the opportunity to make that decision when they're struggling for breath, when there are no other options, and when they're possibly in a life or death situation. I think absolutely they should be able to use those drugs, plain and simple. There's little to no arguments for it outside of the fact that, yes, we haven't done full-scale FDA testing. Well, we don't have a year and a half to do proper FDA testing. Sorry. That's the end of line, guys. This is their lives on the line here. I believe if people want to try it, people should be able to. And what's nice about this is we'll be able to get even more solid anecdotal evidence in this case, where we can start to see whether or not it actually does help people in this case, right? So anyways, I think it's really good to hear that basically the FDA has allowed to streamline this, right? Here's the actual article here. authorizing, in this case, the anti-malaria drugs for use in this case. Along with that as well, Italy home quarantines, repeat mistake made in China. And the mistake here was that they've encouraged social distancing in this case, right? Staying indoors and quarantining. The issue is that for those who have mild symptoms, they haven't provided them a place to go to, a place to quarantine themselves from their family members. And the issue here is that we're actually still seeing generally a good amount of numbers out of Italy due to the simple fact that they've not done the necessary step here in this case of separating people who might show mild symptoms. So we can see here in Italy, numbers still growing. Luckily, however, daily increases have started to stagnate. Showcases that the quarantine is working. It's just a matter now of quarantining those who are sick right now and might show mild symptoms and getting them into an area where they're not going to affect their older relatives or even younger people as well. Even though older relatives are more susceptible to more severe symptoms, nonetheless, it's getting sick people away as soon as you realize that they are sick. Okay? So, interesting development as well. Last point here as well, another possible vaccine, one that had been used over a century ago, possibly being looked at as a use for coronavirus. Updated cases here. Sad to see, but you'll notice out of all of this, guys, all the areas that have actually been able to control their numbers. What thing is similar between Hong Kong, Singapore, Japan, South Korea, and mainland China that is different from all these countries? Every single one of these. Masks. Face coverage. It's the biggest thing. It's the clearest thing here that's playing a role in all of this. It's a big reason why countries like Italy are continuing to struggle, right? Because if they didn't do separation and quarantining in this case for people, right? Let's say, for example, all of us here at the Data Dash family, we had a big house party, right? We're all hanging out together, right? If we were all wearing masks and maybe about half of us are sick, it wouldn't be the end of the world. If we weren't, again, touching our face, we had the mask there to remind us not to touch our nose or our mouth where it's going to be transmitted, wouldn't be the end of the world because we had a mask. And we can see very clearly here, there is no argument. Health officials out of South Korea, who's actually been able to contain the spread of the virus, this is logarithmic, by the way, barely about to hit 10,000 when the U.S. is just about to hit 100,000. And we've only had the virus, in this case in the U.S., for about half the period of time. Or at least we've been, recording tests in this case and really having a growth in our numbers since then. All of the major health officials outside of these countries agree that masks play a massive role. South Korea is in that case. I have no doubt that Singapore, Japan, and Hong Kong will play a role in that as well. Because culturally, this has been a norm in these countries, in these regions. So, anyways, there's a lot of great videos online, guys. One of the things I can recommend to you all, outside of just going through financial markets, is to spend some time to make, for example, take a cotton shirt and actually cut out and follow the instructions on the videos, and you can actually make a mask that wraps around your nose and your mouth. And the reason why this is effective is because you're not only not taking out the demand for N95 masks, it is actually about a 70% blockage rate for pathogens and other different types of elements in the world. So 70% is really good. It's better than nothing, right? Imagine if all of us took the 10 minutes to make one of those masks. Who knows? I might make one actually, and I'll wear it for the next video. We'll see. But anyways, I hope you guys are doing well wherever you are. And I want to let you all know real quick that I'm actually going to be attending Blockdown 2020. I think you guys might have remembered me mentioning this a little while ago. Blockdown is going to be an online conference event hosted by the people who are hosting Istanbul Blockchain Week that has been postponed back into the later part of 2020. And this is in a direct response to COVID-19 and the outbreak. So it's going to be an online virtual conference. It's only $20 or 20 euros. So in this case, definitely check out the tickets here and sign up if you guys can make it. There's going to be a lot of interesting people there. Akon is going to be there. I'm going to be there as well. A lot of interesting speakers coming together at this time during this whole lockdown. And it'll be cool. It'll be the first actual major virtual conference I've ever really attended. So in that case, you can check out the link down below in the description for more information. But that's going to be it for the video, guys. I hope you all are having a fantastic day wherever you are. Hope you all are staying confident during these crazy times. And it feels more than anything good to be here with you guys. So if you like the video, drop a like, and if you haven't already, decide, maybe if you want, you can subscribe and you can hit the bell icon if you want to become a part of the Data Dash family. That being said, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.